All right. So I think let's take this opportunity and do it today. Our panel discussion is around attracting global capital for fintech innovation in Africa. The theme is more in exploring how Africa can attract more international investments into its fintech ecosystem and what investors, policymakers, innovators must do to unlock scalable, inclusive growth. Now, with that being said, I would like to take this opportunity to greet you once again, the attendees, but also welcome our panelists. These great minds also shaping investment landscape across Africa. And together we'll unpack strategies, the minds and the opportunities ahead in investing in Africa. Good afternoon. And our session really is an amazing session. Why? Because early on we had a morning session and what the day went towards how we get to investments really, because the fintech arena in specifically Africa needs the budget to be able to create awareness as well at the same time, because also this is a market, this is a place where it's emerging in Africa. Now there's really times in East Africa. That's what we're so looking forward for this session today, and I'm glad I have you here today. And all of you are from the capital end of the business, and I think we would have an amazing conversation today. Just to set the tone, the audience also can reserve their questions. Check out, reserve your questions. We'll have an opportunity. You can ask them questions, face it directly to someone, or you can ask a general question and see how we can tackle that. To start, I will start with Burak, the CEO and founder of Africa. Burak, just from your insights and experience here in Tanzania, specifically in Rebellion and the island as well. From an investor's lens, what makes African FinTech investor more today? And what do startup needs to do better to gain the trust and long-term support from global capital players? Welcome, Brad.
Thank you, Luto. Good afternoon, or rather good evening, everyone. My name is Burak Büyükselaj. I'm the CEO of Africa Capital. We operate in private equity and venture capital ecosystem in Tanzania. Basically, we raise capital for startups as well as SMEs, sometimes even government projects. We do that in Tanzania and across East Africa. Regarding your question, whether in Tanzania or in any other country, and whether for fintech sector or other sectors, the first and foremost thing that the investors will look at are the returns. And unfortunately, let me rephrase it. Fortunately, in Tanzania and across East Africa, the returns for SMEs and startups are usually statistically higher than the rest of the world, especially when comparing developed economies. And there are many reasons behind that. However, again, it will come down to returns. So, although ticket sizes are relatively smaller in this market, you can have much faster break-even points, better return on investment, and maybe some healthy exit strategies. So, basically, for me, what would make more appealing the fintech investments in East Africa, or rather in Tanzania, would be good returns and fast break-even points. And your second question, what the fintech companies can do to enable themselves to access to that capital. Of course, what we call it in the industry is due diligence. The companies should have a proper due diligence in place. Now, if we are talking about startups, of course, we are not expecting them to have all their permits or licenses in place or their audited financials ready and so forth. However, it doesn't mean that there are some very basic things that they can still do, and those things will not cost them much. Let's start with intellectual property. Lots of fintech companies here, especially the startups, unfortunately, they are not trying to secure their intellectual property. So there are many ways you can do that. You can try to get a patent from BRELA. You can try to get a service/trademark again from BRELA. Just doing those will really help secure your intellectual property in the local, regional, and the global market. And this won't cost you anything. All you have to do is a brand name, is a logo, and some very minor fees to be paid to the government. So that you can start with protecting your interest, your brand, and if it's a project subject to a patent, then yes, your patent. And if you have some resources, then of course you can take it one step further and try to start with the compliance, with the statutory compliance, and then on the financial compliance. You know, as I said earlier, you can try to get your auditing reports in place, your management accounts. So all this will really help investors to take a faster and more accurate decision when it comes to your company. Thank you.
Please, one Ziggy.
I think it's on now. It's on now. It just goes off. It goes back. Thank you, Murat. And I think the audience also would have a few notes taken. But honestly, for the second question myself, I've taken the proper due diligence and compliance should be the way of how you can think your startup literally playing in the market. With that being said, I'll jump straight to Maria as well. Maria, I do have a question for you. And my question is, as a capital provider focused on impact, what fintech sectors or models rather are showing the most promising in Africa today? And how do you balance financial returns with social outcomes when evaluating fintech players? How do you do that? Welcome. Okay.
Thank you very much, and thank you all for your patience and diligence and sticking around until the end of the day. I think everyone here on stage's objectives is to be brief and punchy so that we can free you to your new ladies. So maybe just a quick overview of New Capital. New Capital is a venture capital firm that's been operating on the continent for 13 years. We are now pan-African and sourcing investments from every country on the continent and have a portfolio of over 15 companies. We started our journey in Ethiopia 13 years ago, obsessed with trying to understand how to finance SMEs and how to finance businesses. So for the first 10 years of our journey, we were very focused on investing directly in SMEs. And then as the global landscape started to shift, we recognized that technology was the future, and we saw the opportunity to expand our reach to SMEs through technology-enabled startups. And so we sort of shifted our investment model at that stage to figure out how can we actually utilize technology to expand that reach and invest in more businesses across the continent. And through that learning, FinTech really came up as a rising star in the African context of changing the way that people access money and deal with money and build businesses. And in the past year or so, we've really started to look at, going to the second part of your question, these different models. And one thing that's coming out to us is a really exciting space that we want to explore further. We're very much still in the research phase of this, but understanding how embedded finance can go yet one more level deeper so that we're not just investing directly in technology companies, but those businesses that may not be traditional financial institutions can start providing financial type tools and services to the SMEs that are their customers. And therefore, one investment that we make into a business can reach 5 to 6 to 1,000 different customers that software service is providing. So we're looking at agri-tech with the financial embedded nature of risk reduction and crop insurance. We heard in the moment about insurtech platforms. We've invested in a company in Ethiopia that is digitizing savings groups and helping give them access to micro-insurance platforms. Software as a service companies that are providing inventory management are collecting an incredible amount of data on their customers. And we heard earlier this morning as well the questions and concerns around data privacy, but I think that the flip side of that is that there is this immense opportunity to utilize language learning platforms and AI to start building credit risk profiles for these SMEs. And then just through that knowledge, that data that's already being gathered by the software company, they can build those credit risk profiles and start developing a lending mechanism or a credit mechanism to support their clients. And then you're unlocking all of these innovative and new ways to get money into the hands of SMEs and into the hands of people that need them most without the traditional restrictions of collateral and the other information that a bank would require to have. And so then, to your second or third part of that question, thinking about how do we measure or how do we look at impact versus financial returns? Well, our model and in our mind, they go hand in hand. I think that there's no longer any way to deny the impacts of climate change and the incredible importance of incorporating sustainable and adaptable practices into your business. So when we look at a business, we're looking at, are they able to engage in that? And how is that going to actually support their business? It's no longer corporate social responsibility, it's the bottom line of your business. We look at gender impact in the same way. There's plenty of research out there that now shows a gender smart business is better for your bottom line. You will perform better, you will make more money. So when we look at a company, we're not using it as an exclusionary thing, but rather we say, how can we help make this business gender smart, climate smart? Because we know that that's going to accelerate their returns, which as an investor then turns around and supports our returns. The embedded finance model, I think I've already touched on how that impact is coming just by the nature of the volume of customers that can be reached through that. So for us, it's not one or the other. We see them inherently tied together.
All right, Maria, this is pretty impressive. All I could see is opportunities, and at Renew Capital, you are still unpacking more opportunity spaces from agriculture, insurance, software companies, and probably there's other avenues. Probably you've not mentioned as we go on. Probably you'll also tell us what you're looking into, exploring as of now. So probably if there's anyone here who wants to, would also wish, but also giving it back to the audience, you can literally ask a question on your specific industry or avenue if they are exploring still or not. So amazing. And also we can talk about the criteria of them exploring. You can ask that question more so you can understand. If you can ask now, you can ask afterwards when we are done here as well. And so that's it. Thank you, Maria, once more. Thank you. Moving now to Dr. Joseph. Dr. Joseph, it's an honor to have you here today, all the way from Nairobi, Kenya. This is FinTech Festival, coming to share your insights, your history, the knowledge and the expertise that you have And I do have just a warm-up question for you, or what comes from the audience. From a research and innovation perspective, what role do academic and research and development institutions play in building pipeline of fintech innovation that can attract serious global investments into Africa's digital economy? That is my question for you today.
Thank you, and good afternoon to everybody. I see many young faces up. So just to little bit my background, I come from Stanford University. We are a university in Nairobi in Kenya. I have been there for the last 40-something years. And basically, I introduce all the IT courses. 12 years ago, I decided to set up a research center within university that we call Africa. And together with that, an incubator that we call IB's Africa. One of the most vibrant incubators, we could, I know. So you were asking me about the role of research and universities here. If you look a bit about what historically has been happening, is universities are centers of knowledge and centers of training. Young people come there to learn skills, to acquire knowledge. And in places like the US, the Silicon Valley is around there, or it's also the home of some of the universities, the same you would say about other universities, maybe out of the Silicon Valley is around there. You see all the innovation that is happening down in these universities. And that was my experience. So when I started working with young people, teaching there in the university, I very often realized, well, these guys have wonderful ideas, and some of them are very innovative. I remember a student of mine, she was already programming an application for booking travel buses in Nairobi in Kenya when they basically nobody was even thinking of that. And one of the issues that they normally had is that they would go to these companies and tell them, look, I have this idea, I can help you to have this type of application. Then they would see a young person and basically they would just explicit, okay? So often the students will come to me and say, come out the university, help us. And that was a bit the leading thing that led me to create an incubator in how can we start these young people. They have all these full ideas, but they lack experience, they lack having any type of festival support. And that is why 12 years ago we began our incubator. And it had been a wonderful experience. Okay? First of all, you see that people are trained. It's not just have an idea. I remember another my student starting to be, I told them, look, I get you some knowledge and support you, but you got a proposal with a business by getting then what she brought me was about where as she would get more customers, she will start even losing more money. So I thought we can sell this to anybody. Now, with a bit of training, that person eventually came out of the company that she sold after a number of years for over 120 million Korean shillings. So that is what an innovator does. So it's something that we need to nurture in our universities, is the talent, supporting the talent that is there. And this, the funding, to me, with has to come from the local investors. At times I find this a bit painful that we are doing that, okay, let's get the funding from the US and from Europe. I think local investors have to learn how to discover talent. I remember another student, this was not a student of mine, but was a student at a university. Many years ago, he set up a company in IT, and he got the backup of a very wealthy person in the country. So that person had the vision of helping him financially, supporting that person financially. And he actually developed one of the most successful IT companies in the country. Now, sometime I was talking to the person who actually invested, and he told me, look, I was not too concerned about the idea that this guy was giving me. What I did was to invest in the person. I realized that this person has to try. If he doesn't succeed with this idea, he will find another one. And that is what you see in entrepreneurs. They have an idea, they push for it, they work hard, they have the passion, and they make the efforts. If that idea is not all that good, then they will realize that they will come up with something else. And eventually is how they are going to succeed. So we need private investors to realize the talent that we have. We need private companies. At times I have worked just like guys insurance. So some of these companies, they come to me, okay, look, we want to innovate. So can you help us innovate? But one of the easiest ways to innovate is through hackathons, through competitions. You got to jump in. Because very often they are the ones who understand the problems. I remember another company that we innovated was very successful. It was in the early days of M-Pesa. People were sending money using the phone. A problem that everybody had is that there was no way to have a statement at the end of the month of how much money you had sent. You had to go through the SMS and read them one by one and write down, okay, they sent this file. So these guys came up with a very clever application that will actually go through your SMSs, extract the data, and put it in a spreadsheet. Okay? So a company like Safaricom, they were extremely impressed, and they actually bought the company. Yeah. So you see young people at times, they have the ideas, you just need to support them. Okay? And very often is the power companies, European investors, I think they are the ones that need to take the lead. So I think that thanks, mate.
All right, amazing. Round of applause to Dr. Joseph Sevilla. Amazing, amazing. Young people have ideas, and I like the perspective of funding should come from local investors. Cementing the fact that local investors should learn how to discover talents here locally and invest in them. That is amazing. That is amazing. One last round of applause. Now, before I give them the last question, the wind-up question, I would like to hear if there's any question from the ground If there's any question you want to ask around attracting investment in Africa, specifically Tanzania, and East Africa in general, please raise your hand and our moderator will come to you to aid you the mic so you can ask the panelists here. All right? As you're thinking, I think I should start with Rak and Maria. Really, my first question would be: I know you do have global access to investors. You talk to most of the time. There's a featured African ideas from Africa here. So if we could learn in a few seconds, we would learn what bold message do you share with investors about why they should invest in Africa and its FinTech ecosystem, and the best place to invest right now. Why is Africa the best place to invest right now? Quickly, in a few seconds, how do you pitch that in? Welcome. Right.
If I got you wrong, we are talking about local investors or any investor? Or
Global investors around the FinTech ecosystem. What would probably someone from East Africa say why they should invest in Africa here?
Okay, I'm gonna try to narrow it down. Let's focus in Tanzania rather than all East Africa.
Yeah.
And let's pick one of the major fintech fields in the ecosystem. Let's say payment facilitations or payment gateways, such as M-Pesa or similar products. So now, when you are looking at Tanzania with almost in very near future 70 million people, 40% being extremely young population. So just those numbers are giving you an amazing opportunity just by looking at the numbers and the demography. So that's exactly why, for example, these kind of payment gateways or payment facilitation platforms are extremely well doing in East Africa. In fact, mobile money is doing better than anywhere else in the world in East Africa, in Kenya, in Tanzania. And there's a reason for that. And that is the young population, the fast growing population, and the immense market opportunities. This is a good example to give you an overall overview about the fintech ecosystem in this region. And investors know that. Don't think that they are not aware of this. They are globally. If they didn't invest it yet, either they are taking their time, maybe doing their due diligence, maybe they have some concerns on the political risk and so forth. But sooner or later, everybody will one way or another come here, either directly or indirectly, because the opportunities you are getting here is not available anywhere else in the world. Maybe a little bit in South America, but then even that cannot be compared with Africa, especially East Africa. Therefore, if the investors, wherever they are, if they are looking for especially mid and long-term returns, and if they are not considering Africa, particularly East Africa, they will regret it. So that's why they need to invest there.
They will regret it. What way to add your data and info into African markets, specifically East Africa, Tanzania? Maria, you have something you want to share with us? I would love to hear it as well.
I think Ron did a very good job of summing up most of the same core messages. Are very aligned in what we're trying to do. But I think that 10 years ago, a message that we had for our investors was Africa is the future. These are the emerging markets. This is all the statistics that Ron put out about the youth and the potential growth. He's amazing at
one way or other come here, either directly or indirectly. because the opportunities you are getting here is not available anywhere else in the world. Maybe a little bit in South America, but then even that cannot be compared with Africa, especially South Africa. Therefore, if the investors, wherever they are, if they are looking for especially mid and long-term returns, and if they are not considering Africa, particularly East Africa, they will regret it. So that's why they need to invest in it.
They will regret it. What way to end your data and see through into the African market, specifically East Africa, Tanzania. Maria, you have something you want to share with us? I would love to hear it as well.
I think Barack did a very good job of summing up most of the same core messages. We're very aligned in what we're trying to do. But I think that, 10 years ago, the message that we had for our investors was Africa is the future. These aren't able.
The opportunities are great. The local talent is great. Specifically from the point of view of an investor, there is so much entrepreneurial spirit, but then people that as soon as they try them, if they are given an opportunity, with the training they realize, okay, I can solve this problem, I can solve the problem, I can set up a company on this, on that, on the other thing. These are persons that with a bit of support can go very, very far.
Amazing, amazing, amazing. I don't think there's any question from the crowd. Probably they would want to talk more, but this was an amazing panel, and the discussion was amazing. For me, we've actually heard bold truths and game plans. I like also, I've heard valuable perspectives from Renew as well, and how we can attract capital here in Tanzania, East Africa. But with that being said, I'll not take much of the panel's time. I'd like to thank you, and from the crowd, if we can give them one big round of applause. That's a lot of round of applause. It's just one round of applause. How we do it is one big. One is just one clap, all right? One is one clap, all right? So I'll count to 3. Whatever, if you're holding anything on your hands, put it aside. Let's give them one big round of applause. Okay, 1, 2, and 3. Thank you so much. It was amazing. Until next time, thank you so much.
That's what I would say. So go through that. That's the other.
We post my photo, yes? Amazing.
Is there some of those? That was Chicago. That's good. Bye. Let's get